Have you ever stopped to think about the sheer size of the bets being made right now? I'm talking about massive, $100 billion gambles, not just by giant companies, but by governments too. And they're reshaping our world as we speak. Take a look at this number. That's $200 billion. And on February 5th, 2026, that is the amount of market value that just vanished from a single company, Amazon, in one single day. And here's where it gets really interesting. At the exact same time Amazon lost all that value, they also announced record-breaking revenue, over $213 billion in just one quarter. So think about that. Record sales, and yet the stock price just completely cratered. How does that even happen? That is the big question, right? If a company pulling in record cash isn't enough to make investors happy, what on earth could have caused such a massive panic? Well, the answer lies in another number, an even bigger one. You see, what happened with Amazon wasn't just some random event. It's actually a huge tremor from a seismic shift that's happening across all of big tech. We're talking about an all-out AI arms race. And this is the sentence that did it. During an earnings call, Amazon CEO Andy Jassy casually announced a plan to spend $200 billion in a single year. That number was so far beyond what anyone expected, and it was the trigger for the sell-off. So when we talk about capital expenditure, or CapEx, what does that actually mean? Well, it's the money companies spend on the big foundational stuff. New data centers, super advanced computer chips, all the heavy-duty equipment they need to build the future of AI. But what's really striking here is that Amazon isn't alone. Not by a long shot. Google is projecting it could spend up to $185 billion. Meta is planning for $135 billion. This isn't just one company making a wild bet. It's the entire industry going all in at the same time. And when you add it all up, just the top 4 tech giants are on track to spend over $630 billion on this stuff in 2026 alone. I mean, that scale of private investment is unlike anything we have ever seen before. So you can see why investors are looking at these astronomical numbers and getting pretty nervous. They're asking, okay, when are we going to see a profit from all this spending? Is this getting out of control? And that uncertainty is what's causing these huge sell-offs. But this trend of making these high-stakes, future-defining gambles, well, it isn't just happening in corporate boardrooms. Something very similar is playing out in national policy. Right around the same time Wall Street was freaking out about big tech spending, the Trump administration was doubling down on its own massive economic bet, the idea that tariffs and trade pressure could fundamentally reshape the American economy for the better. And the administration's view on this is crystal clear. In an opinion piece, President Trump himself said that his tariff strategy has created an American economic miracle, pushing back directly against critics who said it would fail. Okay, so that's the claim. But as always, we have to ask, what do the numbers actually tell us? Let's take a look at what some independent analyses have found. Well, according to a fact check of the administration's claims, the U.S. trade deficit actually went up by 4%. A Harvard study found that it was American consumers and businesses, not foreign countries, who ended up paying for most of the tariffs. This actually added about 0.75 of a percentage point to overall inflation. And at the same time, spending on new factory construction has actually gone down. Now, this high-stakes approach isn't limited to just trade. A very similar gamble is playing out on the world stage, and it's focused squarely on Iran. The strategy is called maximum pressure, and it comes with, well, maximum risk. Let's break down this multi-front approach. The strategy involves deploying military assets, a massive armada, to the region. It imposes tariffs on any country that trades with Iran. It issues what are called maximalist demands, meaning a complete teardown of their nuclear program. And finally, it sanctions the shadow fleet of ships Iran uses to move its oil. The economic pressure here is designed to be total. There's a new 25% tariff that basically forces other countries to choose. Do business with Iran or do business with America? At the same time, specific sanctions are targeting the ships and companies that Iran uses to get around the rules, trying to cut off their main source of cash. So when you step back and you connect these different threads, a really clear picture starts to form. It doesn't matter if it's in Silicon Valley or in Washington, D.C.,
We are living in an era that is being defined by these enormous system-level bets on what the future holds.
You've essentially got $2 trillion bets happening at once. On one side, big tech is pouring hundreds of billions into AI, betting that whoever builds the best digital foundation will dominate the next century. And on the other side, the US administration is using its economic and military power to bet that it can force a new alignment of global power. Both are incredibly high-risk, high-reward strategies with consequences for all of us.
And all of this leaves us with one crucial final question. When the chips are this big and the gambles are being made with our economy and our security, we have to ask, if these massive bets actually pay off, who really gets the rewards? And maybe even more important, if they fail, who's left holding the bill?